Today, even though markets were closed, we did have some data that came out. That data was the NAHB homebuilder confidence that dropped 2 points in June to a reading of 43. This is from Wells Fargo, and it is the housing market index. This is the lowest reading since December of 2023. Mortgage rates are thwarting potential home buyers. And it says here on CNBC, mortgage demand flattens even as interest rates hit the lowest level since March. It says rates decreased from 7.02% to 6.94% last week, but mortgage applications to purchase a home rose 2% for the week and were 12% lower than the same week 1 year ago. So this may actually be seen as a little bit of good news from at least the Fed's perspective. Now, we did have futures that were trading up until about 1 p.m. Eastern Standard Time today, and it looks like the Dow was down about 0.16%. S&P was up 0.04%. The NASDAQ futures, clearly the winner, go figure, right? Same crap, different day. The NASDAQ futures were up 0.17%. Oil futures were down about 0.1%. And 10-year Treasury futures, were unchanged. There are more escalations in this whole Middle East situation with Israel that warns Lebanon of a prospect of an all-out war as the U.S. seeks to de-escalate hostilities. This has not affected the markets in a long time, but again, there still is that risk. This could become a larger conflict, and that could have an impact on our markets. But we do have some data coming out tomorrow that will be important for markets. Tomorrow morning, we will be getting building permits that come out at 8:30 in the morning. The more building permits, presumably the more housing that we are seeing, the more developing we are seeing, and potentially the less inflationary impacts of housing that we will see. Again, whether that's right or wrong, that's from the market's perspective. We will get housing starts year over year and housing starts month over month, as well as initial jobless claims. With initial jobless claims that have recently started to spike, if you take a look on a week-by-week basis, you've been rising now for 4 weeks in a row from 216,000 to 221,000 to 229,000 to 242,000 last week. If you get a larger spike, then this is seen as really a leading indicator to more weakness in the labor market. Imagine if we were to get 270,000 for this number tomorrow, and markets might start to get a little bit more fearful about an unemployment problem, recession, whatever you guys want to call it. I don't know what that number is going to be, but there is a chance that it does rise, and that could be problematic for markets. And no, I don't think that would be good for markets at this point in time. You do have Philadelphia Fed Manufacturing Index that will be coming out as well tomorrow, 8:30 in the morning, alongside initial jobless claims and the building permits. You are expecting a number of 6. Last month was 4.5, so you're actually expecting this will get a little bit better. Don't think this is a huge deal because manufacturing has been so bad for so long. I don't think one good number, markets are going to change their sentiment around manufacturing, but hey, it could be important. What will be important is the Philly Fed business conditions, Philly Fed CapEx index, and Philly Fed employment, as well as Philly Fed new orders and Philly Fed prices paid. Specifically, this prices paid component will be very important because that's a direct telltale of inflationary pressures. We will also get a 17-week bond auction, 4-week, 8-week bond auction, as well as a 5-year TIPS auction. Now, this one could be pretty important because TIPS are Treasuries inflation protected securities. I believe that's what it stands for. It's the treasuries that are inflation adjusted. So the last yield you had on this was 2.24%. And whether that comes in higher or lower, it will tell you a little bit about inflation expectations that the bond market is assigning. Now, we are also going to get Fed Barkin that will speak tomorrow at 4 p.m. So that will mainly affect after hours trading tomorrow. We do get inflation numbers coming out from Japan at about 7:30 p.m. Eastern Standard Time tomorrow. That will be important for your Friday trading day because the Bank of Japan recently indicated that they would be willing to hike rates again. Now, when the Bank of Japan raises rates, they raise by like 0.1%. Bank of Japan's inflation has been running a little bit hotter now at about 2.5% on a year-over-year basis. Japan has actually had a problem with deflation for a long time, so they're really welcoming this inflation, but starting to start the process of dialing back a little bit. Now, why that is kind of problematic for U.S. markets is because if you see Japan that starts to, raise rates a lot, that could pull money from our bond market back to their bond market, because right now Japanese investors are like, yeah, there's no point in buying Japanese bonds that pay you 0.1%, if not around zero. There's no point in doing that when you can go to the US and get 5%, right? And Japan is the largest owner of US treasuries by a foreign country. So a lot of people think China owns the US. No, technically Japan owns the US. They own over $1 trillion worth of US government bonds. So that is actually pretty important, could be important for our markets. And then Friday, you're going to have your S&P Global Composite data, your PMIs. So that will be important, especially that services number and the headline composite PMI. Manufacturing, again, can be important, but a lot of the inflationary pressures is in that service portion. So that's what the markets are going to be watching for. CB leading index month over month also will be important. Existing home sales for the month of May and month over month coming out Friday as well. So even though it feels like today might be like a Monday because we did just have this random middle of the week day off, but there's still 2 more trading days of this week. I know it, kind of feels like a weekend out there. There still is some trading left for this week. Heading into the week, Tesla has a short position of 3.65% of free float, $18.72 billion currently sold short in the stock, and that equals about 101.3 million shares that are currently sold short. On Friday, there was a decent amount of shorting pressure on Tesla. Cost to borrow fees were about 6%, and I believe there was about 1 million shares that were actually sold short on Friday, and Tesla stock kind of reflects that. Now, on Friday, on Tuesday. Now, Tuesday, see, it even feels like a weekend to me. On Tuesday, you had 4 orders totaling $476,500 with a positive order value of 66%. These are big money trades. These are unusual trades. They get picked up by the scanner. Now, if you take a look at this Friday's expiration, we have call open interest of 53.08%, put open interest of about 47%. So definitely a little bit more bullish positioning for this Friday's expiration than bearish. Now, I will tell you, this Friday is a quad witching where you have 4 different derivative classes expiring: index futures, single stock options, and index options that will all be expiring. These days are typically worth trillions of dollars. They actually don't tend to be pretty volatile weeks. These quad witching weeks tend to be pretty muted weeks, but it's actually the next week after that tends to be a little bit more volatile as people take their profits, take their money, and reposition back into other areas of the markets, into more puts, you can say, would make sense for this current market as stocks are at all-time highs. And you got to think at some point people will start to get a little bit more defensive, but maybe it's not until next week. Now, if you take a look at this week's expiration for the SPY, you have call open interest of 29.63%, put open interest of 30.37%. So there's over 2.3 times as many puts for this Friday's expiration than calls. So people are kind of defensive for this Friday's expiration, which could be interesting, but let's be honest, whatever happens to the markets, it's really going to come down to Nvidia. Sentiment today for Tesla is bearish at 41. Yesterday, it was neutral at 51. Message volume today is normal at 53. Yesterday, it was high at 57. And the participation ratio today is high at 54. That's actually lower than where it has been in the last couple of days and weeks. Google Trends data still looks really good, uptrending for pretty much all of your Tesla products. Cybertruck's down ticking 1 point, not a big deal. Does suggest that Q2 is doing very good. You do have the Cybertruck going from 78 down to 77, the Model Y going from 30 to 31, the Model 3 going from 26 to 28. Not surprised given Tesla is doing that interest rate buy down on the Model 3 now. I'm expecting more of an upwards trend for the Model 3. The Model X as well as the Model S uptrending about 1 point a piece as well. So coming on July 2nd, I do believe we can be surprised with an upside number on deliveries. And that would be a huge deal for Tesla stock and really go to show that Elon's back in charge. Interest rate buy downs are having a positive effect on demand, and maybe Tesla numbers can actually start to trend upwards again instead of trend downwards. Google Trends data for full self-driving is really just trading sideways here, sitting at about 23, which does continue to suggest a good take rate overall for full self-driving. In one of the biggest disparities that you'll probably ever see in your investment lifetime, CNN's Fear and Greed Index is sitting at 42, which is in fear territory. At the same time, markets are ripping to all-time highs. The NASDAQ is sitting with an RSI of 82, so the NASDAQ is severely overbought. That the SPY is pretty severely overbought as well with an RSI of 78. I've never seen anything like this before, and I think it's probable that we can expect at some point a sharp, short-term kind of momentum flip. Now, does that happen throughout the rest of this week? I don't know. The percent of stocks trading above their 50-day moving average is sitting near a new low for 2024 at 37.88%. I don't know what to do. He just won't stop crying. Tesla continues to run about 4,000 different ads with Google. Global inventory numbers have recently fallen quite a bit for the Model 3, the Model S, and the Model X. At the same time, the Model Y is shooting up a little bit. But overall, not a big deal. As far as a technical basis for Tesla stock, as I mentioned in previous videos, as the markets were starting off this trading week, you bounced off that 100-day as well as the 20-day moving average. They pretty much converged. Now you're actually getting the 20-day moving average breaking above the 100-day moving average. In the short term, that is a great sign. Your 20-day moving average is now above the 50 and the 100-day moving average. That tends to be very positive on a technical basis, at least in the short term. Now, as I mentioned, to start off this week, you really wanted to stay above this trend line here that I've had drawn on this chart for a while. That was around about 183 or so, 183.50. You bounced right there on Tuesday. You bounced at about 182.38 to retake that level and close at 184.68. So I actually think the technicals look really good heading into the end of this week. As long as you don't see that sharp kind of pullback because the markets are overbought, I think Tesla could actually run above this key kind of mystical level at about 188. 188 continues to be the level that Tesla stock finds a lot of resistance at, continues to get stopped out there, and really to see a close by Friday above 188 will be a solid win for Tesla stock investors. Now, obviously, if you're waiting for Tesla stock to fall, then you want to watch the last video because there could be problems coming over the next couple of months. But in the very near term, things look pretty good on a technical basis. You also have the RSI at 56.97, so pretty neutral overall. The MACD has started to curl up in a pretty good way. That tends to be positive in the short term as well. And let's be honest as well, if 10-year treasury yields do fall based on the data that we get tomorrow or the data that we get on Friday, that could help give Tesla a little bit of a boost. And after all, on Tuesday, Tesla stock was down about 1.5%. So to see a little bit more recovery coming tomorrow or on Friday wouldn't surprise me, and that's kind of what I'm expecting. So let me know what you think about this information down below in the comment section. If you guys have not seen that last video, check it out. I think it's very powerful, talking about a multi-decade potential bull market for Tesla stock, multi-year at the bare minimum. So thank you guys for watching. Enjoy the rest of your day. Me and Emerson are out. Pool party? You want to go pool party? Yeah, he wants to. He actually hates the water. I need to get him used to it. But nonetheless, you guys have a great rest of your day, and I will see you in the next one.